A very good morning from Khandwala Securities Limited and welcome to Thursday's trading action at Dalal Street dated February 10th, 2022. In yesterday's trade, the benchmark Nifty ended higher for a second day in a row. This morning, Dalal Street is likely to grind higher as investors are likely to pick up the positive pattern from strong overnight close at Wall Street. Helping sentiments are first, 10-year US Treasury yield, which has stabilized at 1.922% after hitting 1.954%, its highest since 2019. Also, the oil prices, which have slipped to around $89 a barrel ahead of resumption of indirect talks between the US and Iran, which could revive an international nuclear agreement and allow more oil exports from the OPEC producer. Our call of the day, which suggests that Nifty is likely to consolidate with positive bias in today's trade. Focus from here on will be on two big catalysts. First, US January inflation data to trickle in on Thursday at 6 pm Indian Standard Time. Second, RBI MPC policy outcome to trickle in at 11 am. The street suspects RBI will maintain status quo on benchmark interest rates or repo rate on backdrop of inflationary concerns amidst evolving geopolitical situation. There is a big probability that the MPC may change the policy stance from accommodative to neutral. Digging deeper, the outlook on inflation and growth may remain unchanged for the current fiscal. Digging deeper, the outlook on inflation and growth may remain unchanged for the current fiscal, while the statement is keenly awaited for its forward guidance on inflation and the GDP for the next fiscal. The street will spy with one big eye if RBI rethinks if the course of policy action in light of various global central banks adopting a tightening stance and most importantly, especially after the recent budget announcements of an increase in government borrowings and a higher than expected fiscal deficit number. Technically speaking, Dalal Street could win only if Nifty is able to move above its biggest hurdles at 17,807 mark. Hence, aggressive risk buying only above 17,807 mark. Technically, Nifty's downside should be limited at 17,311 mark. Please note Nifty's 200-day SMA is still at 16,760 mark. The Nifty options data for February series suggests Nifty is likely to be in a trading range of 17,000 to 18,000 zone. Maximum call open interest at 18,000 followed by 17,500 strike price. So the 18,000 mark would be Nifty's crucial resistance zone. Maximum put open interest stands at 16,500 levels followed by 17,000 levels. Call writing was seen at 17,800 and then at 18,400 strike price, while there was meaningful put writing at 17,400 and then at 17,000 strike price. As per Wednesday's provisional data available on the NSE, FIS sold shares worth Rs 892.64 crores. DIS, however, bought shares worth Rs 1793.35 crores. Before we end this podcast, our chart of the day. Our chart of the day is bullish on stocks like SRF and Balkrishna Industries with an inter-week or inter-month perspective. That's all we have for now. For any queries, do contact us at 02240767373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Our company or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.